good to see you. Glad we could catch up again and
Yeah.
learn about what you're up to. Right? I mean,
Mm-hmm.
you've been in Bitcoin really early on. You got into you were a core developer. You helped structure Bitcoin Cash
Mm-hmm.
and grow that code base under ABC. And you're now working on eCash, right? I mean,
Yeah.
another derivative. And you know what I was always impressed by you and what you were working on was just really getting into the nitty gritty of the Bitcoin code base, right? And trying to rewrite that whole code base, build out a modern programming language off the back of what has been built with Bitcoin. And so, yeah, great to have you on the show. Thank you for sharing your insights and more about what you're up to, Omri.
Well, thank you for having me.
Yeah. No, it's really good. So where are you at with eCash? How's that coming along?
Well, it's actually going along fine. We've launched earlier this year the Avalanche consensus algorithm. So
Yeah,
that was the project. That was also the project on BCH actually.
yeah,
But it it took much longer than expected. Mostly not for technical reason, but mostly for political reason and various other.
resources.
Um, well, resources is part of it, but also like a bunch of people pulling in different direction. Um, you know, makes it much more difficult when people don't pull in the same direction to go anywhere, right? Which I guess is the price that you pay to have some decentralization. It's not as efficient. So it took us quite some time to get there, but no, we're finally there. So what does that bring us? That brings us much more security on the network, which is fairly important because we are a minority chain. I think other minority fork of Bitcoin, they need to get a bit worried now, considering the percentage that they have when we were in the. Maybe I'm getting too much into the weed now, but it's let's say it's getting us right now a much higher level of security. Basically, if you get your transaction mined in the block, you can consider it final. There are not going to be any reorg or whatsoever. Well, the node can tell you when the block is finalized by Avalanche, but it typically takes less than 2 seconds, right? So it's confirmed in one block, you're good to go, which is, I mean, always
Pretty
gonna.
unique.
Yeah. It's always been a problem on Bitcoin Light system that you need to wait for 6 confirmation and blah blah blah, and and if you're a minority fork, you may potentially want to wait for even longer because the hash rate is
Yeah.
not as high. So that always has been a pain point. And now we're working on making that work at the transaction level. So the first version that we rolled out only works for blocks. So you still have to wait about 10 minutes for your transaction to be finalized.
Wow.
And we're working on making the same work on every single transaction. So you would make a transaction, and within 2 seconds, you would know if the transaction is final or not.
Yeah, just to put that into perspective, right? I mean, for maybe some of the listeners as well, on the Bitcoin Core ecosystem, they needed to create the Lightning Network, a layer two network, in order to get fast finality. And then all of the verification happens subsequently on the blockchain. What Omri has been working on is really how do I build that on the layer one, on the blockchain,
Mm.
and get fast finality in 2 seconds, so faster than a credit card, right?
Yeah.
And that is super impressive, all on a
That was
decentralized basis.
it's interesting that you bring credit card because like the timing that we looked at, when you start doing something, I think many people proceed the other around, like they're like, okay, how good can we make that stuff? But really you want to decide like what is your limit, you know because it's gonna constrain the design space that you want to explore or not. And so we looked at data from payment processors that were like, basically, if you do it in more than 3 seconds, people think that the experience is bad. And
Yeah,
if it lasts more than 5 seconds, then people start thinking that, oh, maybe it did not go through, or they start thinking that it's broken, right?
when it's
um,
broken.
so So we were like, okay, well, if this is the way people think about it, then our hard limit is 3 seconds, right? Like if we do more than 3 seconds, then people are gonna think that the experience is degraded.
Yeah.
So like right away, there is a bunch of approach that you can throw away out of the windows because they will never get anywhere
Doesn't fit.
close to 3 seconds, and that led us to use the avalanche consensus algorithm, which typically converge in less than 2 seconds. So that was a good choice.
So walk back maybe in the Avalanche
Mm-hmm.
pre-consensus algorithm, right? And this is nothing to do, well, it has something to do with the Avalanche blockchain. I mean, but maybe walk back, sort of what is you were talking about it, I think at some conference you were starting to talk about this in 2016 or 2015, as early back as back
Mm-hmm.
then.
Yeah.
Um, and yeah, and it was, and you also, I mean, Gun was there as well, also sort of supporting it and working it. How is that different to what Avalanche is talking about right now and what they're trying to do?
Yeah. So
As in
avalanche is
Avalanche, the blockchain.
yeah. So let's call it AVAX, right? Like this is what most people
Yeah,
call it. Otherwise, it gets a bit confusing. Avalanche is a consensus algorithm, and just like Nakamoto Consensus is, and just like you have many blockchain that use Nakamoto Consensus, like Bitcoin,
yeah,
Bitcoin Cash, Litecoin, Dash, and a bunch of others, they use the Nakamoto Consensus.
Monero. Yeah,
Monero as well, yes.
yeah,
Um, well, Avalanche is another consensus algorithm, and
yeah,
in the same way, you can build several systems that leverage that consensus algorithm. And AVAX is one of them, probably the first one I think that used that system. And we are probably the second one to leverage it. So the main difference with AVAX is that AVAX, they use exclusively the Avalanche consensus algorithm. And it comes with some trade-off, notably that you cannot have a trustless bootstrap, right? You need to have some trusted party that tells you, hey, here is what the state of the system is right now. And then you can continue to operate in a decentralized and trustless manner, but you cannot bootstrap yourself in a trusted manner in that network. There are also problem with liveness. So when the network made a decision, you have no track record because you don't have a blockchain in the traditional sense, like you have with Bitcoin that is protected by proof of work. And so you cannot go over all that history and verify that, the consensus algorithm was run adequately over time. You just have to trust, like if you are not there live participating in it, you need to trust that everybody is doing the right thing. You don't really have a way to verify that. So we're not so happy with making that trade off, and so we decided to just not making it at all. Right, like eCash is still a derivative of Bitcoin. It still have the Nakamoto Consensus algorithm in it,
yeah,
and it provide all those property that you can bootstrap in a trustless manner by following the longest chain and all those stuff probably people are already familiar with. But
yeah,
we use Avalanche to provide an extra layer on top of it that provide additional feature, right? So actually you can connect to the eCash network and completely ignore the Avalanche part of it, and you're gonna get properties that are similar to Bitcoin. But if you decide to run like a more modern client that understands the Avalanche consensus, then you get finalities for your block, and when we get there, you're gonna get finality for your transactions.
yeah. That'd be amazing. I think, the finality for transactions is really what the end user experiences, as well as the retail
Mm-hmm.
merchant, right? I mean, that's what they really care about, to build out this peer-to-peer electronic cash system, which yeah.
Yeah, it's the more important one. And something that is interesting is that it's not so much more difficult than doing it for block. It's like roughly the same thing. The main difference is volume,
Yeah.
right? You have one block every 10 minutes. So because you just have one block every 10 minutes, then there are a bunch of factors that don't enter into the equation. Like what if someone starts submitting millions of transactions? How do you handle the load and all of that? Well, someone is not going to submit millions of blocks because they are expensive to produce. So there
Yep.
is, part of the design space is simpler when you do it on blocks, and this is why we started doing that. But essentially, this is the same problem on transactions. Just there's a question of volume additionally. So it shouldn't take the same kind of it shouldn't take as long as it did
It's the
for.
same heavy lifting.
Yeah, it's much, let's say it's much easier to go from doing it on block to do it on block and transaction than it is to not doing it and go do it on blocks.
Yeah.
That makes sense.
And
Like
then
that first step is like the most difficult one to take.
so getting the pre-consensus in the blocks themselves, and then the transactions in the blocks is the next layer down and should be easier to get done. Is that what
Yeah,
you're
yeah,
saying?
yeah, yeah.
Yeah.
Yeah, it should not take
Yeah.
years like it did for blocks.
Yeah. I mean, I think, one of the things that not only is that going to provide a better user experience on the sort of blockchain consensus, sort of a Bitcoin consensus model or Nakamoto consensus model, but I think the other thing that you've always been toying with is, as a core developer, right? How do you get rewarded for all the work that you do? And we've been in the past, our workings together was how do we reward and incentivize developers to continuously build on a programming language that is, as a software engineer, you're not receiving the same benefits as a miner, for example, right? The miner gets the rewards. How does that get shared between all the different participants? And it's basically the miners that then get to decide how to best implement the software improvements.
Well, but one of
A
the
lot of the
problem is
times.
that the miners, they are in competition with each other, so they have actually
Yeah.
very little. They have very little headroom to actually do that.
Yeah.
Yeah. So what we ended up doing is that there is a part of the block reward that goes to a fund for developers,
Yeah.
and we're not the first one to do that. Like Zcash did something similar, and Dash
Similar, right?
and a few others. So it's not. Yeah, it's not something that is particularly new, but it's something that I've proved to work, and it's been providing much more stable source of revenue to keep the work going on. So
Yeah.
that's.
I mean, Dash did it a lot for the marketing purposes, right? So they really wanted to market Dash out
Mm-hmm.
there and get it as a payment mechanism. And they had these ambassador networks, didn't they? They had these sort of embassies or something. I can't remember what they called them, but these different types of market, that they would reward, incentivize to go acquire merchants or help promote the adoption, get wallets installed and stuff like that.
Yeah, I'm not too sure that the way Dash did it is so great. Like when you looked at how much they spent on that and how much they got out of it, it seems fairly inefficient.
Yeah,
But that was one of the first one to do it as well, right? So you would expect that the first one doesn't figure it out all of it right away.
yeah,
I think one of the problem with Dash is like the incentive are just not quite right because the people making the decision are going to be people running masternodes, and many of them, they are not really involved in the results, right? And so they don't
yeah.
really. So as a result, you have a lot of communication that gets rewarded more than actual impact on the ground.
Yeah, and I mean, it's setting up this model, right, where there are some of the mining reward gets automatically allocated towards a pool, which then gets distributed to a developer community. It was pretty controversial. And in fact,
Mm-hmm.
sort of led to a lot of resistance. There was a big constituent that really didn't like that model, right? They called it a tax or whatever. How do you feel? Is it working out now? I mean, now you've launched with eCash, you've set that in place. Do you feel that's you're happy with the outcome in terms of how it's working?
Yeah, 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 yeah.
Yeah,
Well, what was happening is like in the BCH ecosystem, in the
yeah,
beginning we could actually bid stuff, but at some point everything becomes so political that you would spend a good amount of your time and energy try to under like political problems more than actually build anything. And that has been very damageable to the BCH ecosystem as a whole. And you see that today, like uh, I don't know, like BCH is not doing so good. Like it's actually barely, it's barely higher in terms of valuation than eCash. Um, when basically at some point we were like, okay, you guys can keep like most of the ecosystem, but we're just not willing to continue working in those conditions anymore, and we went our own way. We should be worth like a fraction of what BCH is, and the
Yeah,
fact that we are competing in the same league now is, I mean, like really worrying for BCH, because the most difficult part in growing those stuff is growing the ecosystem, right? There is a network effect there that is a bit
yeah,
difficult to bootstrap. So the fact that BCH was able to keep most of the ecosystem and still end up at the same place as we are, maybe like slightly higher, but in the same, let's say in the same league as we are, is for me it's very worrying. Also disappointing. Like some people think I wanted bad things for BCH or whatever to happen, which is, I mean, it's completely stupid. It's clearly people that have never built anything in their life that would think that way. Like when you've built something and invested several years of your life building it, you don't want it to fail, but you also need to
yeah,
look at it objectively, and objectively, it's not doing good. Considering, like, I mean, it's accepted by PayPal, and like the level of support in the ecosystem for BCH is huge. It should be a top 10 coin. The fact that it's not is a huge failure of the community and the current leadership of the coin, I think.
yeah. So I mean, rather than going into that, I mean, I think there were definitely a significant amount of changes at BCH, and I think there are still a lot of diehards that are working on it and trying to build on it. But I mean, when you set up eCash, I mean, it's about a year and a half.
Mm-hmm.
When did you sort of, yeah, about a year and a half old now, right? And it's like, and it seems that you're sort of, I mean, I guess you're pretty happy with the progress.
Yeah.
And where do you see sort of the future of eCash? Where would you like eCash to go? And I know you're a really big builder. And I mean,
Yeah.
yeah,
So the thing that yeah, yeah.
what are the opportunities and prospects, and
The
what do you
thing
see?
that I would want to see is, we have this idea of creating subnets.
Yeah,
Uh, so there have been a problem. There have been something that people have been trying to build with Bitcoin for quite some time. It's the idea of sidechain or drive chain, or like there are many variations of that idea that have been proposed over the year, and they never quite work. Because so the general idea is what? The general idea is that you can take some coin from the main chain and put them into some other system that have different rules, and at some point you can bring them back in the main system. And those other systems, they don't depend on the core developer, and they can evolve in any direction. And that would be a space where people could create many of those and try to innovate and see what works and what doesn't. And the problem with Bitcoin like system is that we know to do most of that, except the part where you bring back the coin on the main chain.
yeah,
Nakamoto Consensus, just like, people have never figured out the way to do it with Nakamoto Consensus. And I was about to say it's impossible. Maybe it's not. It's always dangerous to say it's impossible, but it's been 14 years now and nobody has been able to figure it out, right? So let's say if it's not impossible, it's at least very, very difficult, and it's
very, very, very difficult.
very speculative. It's possible at all, right? So but because we don't use exclusively Nakamoto Consensus, we use Avalanche as well. With Avalanche, this reverse peg is not too difficult to do. And so now, what does it mean? That means that, maybe you can create a subsystem with an EVM that works more like Ethereum than it does like Bitcoin, and people could, move some eCash in there and use smart contracts and whatnot. Or you can do one with zero knowledge technology, where people can do transactions that are completely opaque. or you can do like, the whole point is that you can do one that have any kind of rules. So we don't know what IDs people are gonna come up tomorrow, but we know that we can create a subnet that, if those ID gets traction, we can create a subnet that leverage them. And I think it's very exciting, right? Because one of the main problem of the whole crypto space is that when you want to innovate on the technological level, you always find yourself at some point where you have to mess with the consensus rule of the system. And now everybody has to upgrade at the same time. This is an upgrade process that's going to take months. And you need to be extremely careful because any bug in there is going to have like very dire consequences. So innovating this way is actually very slow, very difficult. And to the contrary, you'd want people to be able to try stuff, launch them very quickly, see if they work or not right away. So having a space to do that, I think, is extremely important.
So just to sort of translate that maybe a little bit is basically you see that the opportunity with eCash and using the Nakamoto Consensus as a base layer would enable subnets to be built on top of, let's say, that base layer, similar to what Avalanche is doing with the different chains, or what Cosmos has been doing,
Yeah.
and what Polkadot and their parachains have been trying to do. And in this case, you can actually build and level and leverage the Bitcoin capabilities that eCash provides, as well as then building on top of that, you could create a subnet that has ZK capabilities, or sort of anonymity capabilities. You could have another subnet that has EVM capabilities, etc. Right?
Yeah, exactly. And
okay.
you'll note that all the examples that you brought up are all systems that don't work with Nakamoto Consensus. They all have a different form of consensus. Like Cosmos, for instance, doesn't use traditional mining Nakamoto Consensus. It uses its own stuff. So all the
Polkadot is
or
POA.
AVAX also have those different chains that can interact with each other. So when you and because we deploy Avalanche, we can do similar things. So yeah,
Interesting.
I think that's probably the most exciting part. I think that's probably the most at least for the long
and is
term.
that And is that sort of where you sort of see a large portion of that developer fund being allocated towards developers that may want to support building out such a subnet? Or do you see that, or in the future as well?
Yeah, if people have promising subnet IDs, we should definitely fund that. Yeah.
Oh, yeah. Okay.
Like the way the developer fund is structured right now is like it's half and half. Half goes to the core team, so it's gonna be like our team, and half of it goes to fund project in the ecosystem. And this other half, like recently we funded the project called Chronic, which provide an indexer. So indexing on Bitcoin as it's something like there are many half-assed solution effectively, right? But there is no good one, and on a regular basis someone is like, okay, we're gonna build a new one, and it kind of end up being half-assed as well. And now we have like one more half-assed solution for indexing. And I think the main issue there is that we should do indexing in the node software. Like people always try to strap something on top of the node to do the indexing, and it doesn't quite work this way. Like, let's say it's way more difficult to do it this way in a reliable manner, and this is what you see when you use them. It's that it's difficult to keep them reliable. So there was this guy, Tobias Rock, who wanted to build an indexer, and so we were like, okay, well, if you are willing to merge it into the node software and have tests for it and stuff like that so that people can maintain it, then we're gonna fund you to do it. And so he did that, and now we have an indexer that is available for everybody to use. And I think this is this is much better. This is a kind of situation that is much better than what you get with other Bitcoin flavored chains.
Interesting. Yeah, no, that's indexing is obviously pretty important, and being able to see what's been going on across the chain and what sort of type of transactions are
Yeah,
happening.
so
But it's
it's true, but one thing that people don't realize, it's not useful for the node itself.
yeah,
Like the node don't need that to verify the consensus rules, which maybe is a bit surprising. But any kind of useful application need that. If you want to build a wallet software or a payment processor or whatever, like any one of those will need that. And
yeah,
and so we are in this weird situation where everybody, almost everybody in the ecosystem need that, except the people working on the node and validation of the chain and stuff like that. And as a result, it's never been merged into the node itself because for regular operation of the node, it's not needed. And as a result, like everybody has been peppering over that, try to have a system that talk with the node and goes back and forth and try to figure out what is going on in there and build an index based on that. But invariably, the node and that other indexer get out of sync or something like that. And like the maintenance effort that people go through to maintain those indexers is actually pretty high. Something that maybe users don't realize. But you've worked at Bitcoin.com, I think, and you probably realize that for the wallet, for instance, and the indexer,
it's pretty important.
yeah, well, not only is pretty important, but it's gonna break sometime, and people need to go there and fix it. Like it takes a fair amount of attention and work to actually keep those things running smoothly over time. They,
Yeah,
they don't
and
run
sort of
themselves, let's say. Like a web server, you
no,
can set up a web server and it
it
jumps
runs.
through, it runs. You don't really need to do very much of anything, but it's really not the case for Indexer. They need to be babysitted a lot to work properly.
Yeah, and so getting the indexes correct, I mean, there are a number of different companies that are actually just focusing on indexing a lot of the transactions on the various blockchains, right?
Mm-hmm.
There are special chains that actually do that and spend all their time to aggregate that type of information together. But I mean, just on that note, right? I mean, it's also really important for dApps to either build out using indexers and then incorporating some of the capabilities to provide data to the indexers as well, right? So it's always a bit of a two-way street, right? And especially in projects like DeFi, and I know a lot of institutions have been sort of a bit or chains and maybe you as well a bit at the beginning have been very resistant to DeFi and what is decentralized finance, and sort of, if you look at DeFi, and to me, why I really am excited about DeFi is the fact that it really just provides another decentralization of the whole financial system. And to me, it's having a new financial system in place where people can opt in. If you don't like it, stay away. But it's more transparent, it's more insightful than what you get from the existing system today. And how do we allow for innovation on that? And if the cost benefit ratio is far greater than the costs that you have of running a CFI business. And so how do you see, DeFi working with eCash? Is that something that you're open to? Sort of, are you still pretty skeptical about DeFi and where DeFi can go?
No, so what I've been thinking since the beginning about DeFi, and that has not really changed, is that, well, in there you have like 90% of scams and you have like 10% of very interesting things going on. And I guess it's like the nature when you bootstrap something new is the nature. Like, at the beginning, people are very naive and they fall into all kind of trap. And at some point there is a bit of an immune system that builds into people. They're like, oh, I've seen that before and it was it was fishy the first time, this is probably fishy as well, right?
Yeah,
Um
yeah,
like things like Luna, for instance, are probably not gonna, well, they're probably gonna happen again, but like less and less over time. Like people are gonna learn
yeah,
eventually, and at some point where you're gonna have something similar to Luna that came up, people are gonna be like, hey, like it has happened a few times in the past. Usually those kind of projects, they turn out very bad, so you should stay away from that. So, but that's a culture that takes some time to build, right? And I think one of the problem we have in traditional finance is that we try to protect people from that through like regulation and customer protection and whatnot. But as a result, people never build that immune system, right? They become very naive, and then when something, when the regulator misses something or whatnot, it gets really big, and it gets really bad very fast. So it's a bit more messy to let it happen, but I think it's beneficial on the long term. So anyway, on I'm not against it. It's a natural part of the process. I think if we want to make that very successful on eCash, we are gonna need an EVM subnet, because uh, EVM is like de facto language
Yeah,
of this
yeah,
ecosystem, right?
yeah.
We can argue
Yeah.
that it's the best or not, but it's like it's the de
It,
facto
it,
standard. So you kind of have to, if you want to be successful in that
that's
space, you're gonna have to have an EVM involved somewhere. It's kind of like
no doubt about it.
JavaScript. It's the language of the web. Everybody's bitching about it because many mistakes have been made, but it's supported by every browser. You're not gonna get everybody to install a new browser, from one day to the next. So it is
Yeah.
what it is, and you get to work with it. And the EVM is a bit the same. Like there are some design decision in there that are questionable, but it runs, it runs the DeFi ecosystem now. So you get to have it.
Yeah, so I think you're saying that basically in DeFi, you find there are some really cool protocols and really interesting projects that have evolved. And there are also a lot of, crap projects or projects that are scams and rug pulls have happened.
Yeah.
But the valuable projects are the ones that are really providing contribution and have allowed for the Ethereum ecosystem, particularly, and the EVM to really prosper and grow by taking those sort of lending protocols, the decentralized exchanges, the automated market makers, and maybe even to a certain extent NFTs have allowed to extend beyond just Ethereum platform onto all these other EVMs. And how could an EVM subnet on eCash possibly prosper by supporting some of these DeFi type models?
Yeah, I mean,
Is
I think if we support an EVM on eCash and EVM Subnet, it's beneficial for eCash, obviously, but it's also beneficial for the rest of the ecosystem, because what is beneficial in DeFi is being able to interconnect those different stuff and be able to, uh, like build things to the next level. Um, in that way, it's not really the chain itself, it's or the token itself, it's the ability, okay, I can borrow that token and invest in that thing, or build that new application or whatnot, or build that new token, or do this and that and the other. Like there are many things that people are doing on there, but really the benefit is having all those systems that can talk to each other and that can be plugged into each other. So, and anything that you had in there benefit both parties. um,
yeah.
People that are looking at it like we need to have like we need to concentrate on the ecosystem in our private garden, I think are looking at it wrong.
Yeah. Yeah, no, I mean, I think, in the end, it's about distribution, right? And where are users going and how do I get the users to participate and engage? Where is their wealth that's locked up and maybe not earning any yield? Could they be interested in yield or not? And if they are, how can we provide the right kind of solution to offer up an opportunity to earn rewards with minimal risk, right? The higher the reward, obviously the
The
risk
higher
becomes
the
bigger.
risk, yeah. this is
Yeah, exactly.
this is why it
Exactly.
was a bit scary in the previous in the previous bull market. People were like, okay, you have
Yeah.
those solutions that have 20, 30, 50% API or whatever, right? And it's like, well, if you are getting this kind of API, it means that you are
There's
taking a significant risk. Because like, regular market return are like typically less than 10% in,
yeah.
like if you can find a traditional market investment that gets you 10% return, you're outperforming the market quite a bit. So like 20% is like super 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 high. um so and you see that a lot of people in the ecosystem, they were not really educated about those ideas, and this is why they fell into those traps. But eventually
Yeah.
they're gonna be educated, right? Because those concepts, they are not so complicated, right? It's like, okay,
Yeah.
you can keep your money like it is and you don't make any more money, or you can get your capital at work and you get some return, but obviously you take some risk that whatever you invested in don't pan out in some way. And typically, the higher the yield, it means that people would rather put their money in something else than that at equal yield, right? And this is why that specific project or that specific investment um, needs to have higher yield to attract the capital.
Yeah.
And so that means that you're taking a bigger risk, or at least that the market as a whole estimate that the risk is bigger. And so either you are like a specialist, you can estimate those risks very precisely, and you can know when the market is wrong and go in there. But that require you to look at data all day long and be very good with statistics and this kind of stuff. Like some people do that, right? But most people are just not going to be able to do that. So for most people, the market is probably going to estimate those stuff better than they do.
So what do you think? I mean, I think like a lot of us that have been in crypto for quite a while, or Bitcoin and Web3, whatever you want to call it these days, but we've been in this area for quite a while, and we've learned a lot of lessons along the way.
Mm-hmm.
And we were fortunate to learn some lessons at a much lower,
Price.
when Bitcoin was a lot that price, right? Yeah. um, but is in my view, I find that the educational system for financial self-control, self-management, right? Managing your own finances. Why do we not have an education system that teaches people really early on how to evaluate, higher yield, higher reward? Using credit card, you pay a lot more interest. Using a bank loan, you could get it. This is how you do that, right? So you can evaluate the different processes and then have a bit of, in order to make a mortgage, I need to have this much earning. It's going to take me 30 years to pay off this. How do we get better in terms of educating people versus just doing it on ourselves and learning as we go along?
I think it's a very difficult problem to solve because people who are good at those things don't end up being teachers usually, right?
Yeah.
Because there are other things that they could be doing that are much more valuable, right? And and so you like the economic forces are playing against having good education for this kind of subjects. So I'm not quite sure. I'm not quite sure how to solve that. Like, right, an investment
How?
banker, for instance, is gonna make way more money than a teacher. And so
Yeah.
if you are knowledgeable about those kind of topics, you would rather be an investment banker than be a teacher.
Yeah, maybe. Yeah. Yeah. I mean, or, yeah, I mean, that's definitely one angle to look at it. I mean, the other area was just really, um, yeah, it's the curriculums themselves, are still also equally antiquated. They're
Yeah.
just so old.
I
We're
think
learning stuff that the same process that we've been learning and frameworks that we've been having for centuries,
yeah,
right? And we live in a very different age.
I think we have a bit of an opening because now there is a lot of online teaching. And
Yeah.
online teaching have different economics, right? Because it can have economics of scale. I can
Yeah.
make a course online and sell it to 10,000 people, and it's just as good as teaching it to like 10 people. Whereas if I'm in the classroom teaching people directly, obviously if there are 10 people in the classroom, they're gonna get the higher quality product or higher quality education than if there is hundreds of people in that room.
Yeah.
So online teaching scales much better, and so maybe there is an opportunity for people who understand those topics to be able to reach a wider audience and make it worth their time and efforts to do that versus whatever else they could be doing. So maybe that's an opportunity, though. What we see on that front as well is like it's not so great right now, because those courses are more like, oh, you can become a billionaire in like 2 weeks if you follow
Yeah.
my
Exactly.
secret techniques, which once again is like, I don't know. I didn't take those courses, but it doesn't seem very credible that you could do that. Um, but I guess
No,
eventually,
but
as
we had like innovations with like Khan Academy and YouTube channels, right?
yeah,
And sort of not just specific influencers, but you got Code Academy, right? You got all these different types of academies that are built out online, or EF, what's that? The online learning for English language, and
hmm
stuff like that. So people have done curriculums that really work, and
no, there is a big
how,
boom happening in that area.
yeah,
That's a very promising market. It's really growing right now. Uh, Mostly because the economics of teaching in that way are very different from the traditional way, and that makes me hopeful that someone is going to tackle financial question in that manner, and
yeah,
provide a high quality financial education that way, because the economics can work that way, and the traditional way there is no way, like unless someone decide to sacrifice themselves, it's just not gonna work. And you cannot get people to like, maybe there are some people that are gonna be passionate about teaching those stuff and that are willing to make less money to do that, but this is not something that scales, right? Like you cannot expect a lot of
yeah.
people to do that. So you need something that works economically.
And that to me is sort of really where I feel, one of the reasons why we got into this was the old system of financial systems don't work, right? They are broken. In
Mm-hmm.
2008, why did Bitcoin come to fruition? Because we need a new system versus the old system. And we're sort of now at, I feel, an inflection point again. We're back in another economic crisis because of the mismanagement. The old systems don't work, right? And now we're trying to, we need the institutions to come into Bitcoin. And, well, let's change these new systems that we built to fit to the old system so that the old guys can come into this new platform. And it's like, hang on. No, 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 no. Why should we do that? We're already more transparent. We're already more independent. We've all learned. All the people involved in crypto are true believers and are engaged and are knowledgeable about financial management, about how to tackle FOMO. Maybe not all of us. Sometimes still we all jump in on a specific project, but we all hold each other accountable. We know that we do our own research, verify, trust and verify, sort of elements and things like that. So
I'm 100%
now,
with you
yeah,
here. I'm 100%
yeah,
with you. I think this is something we've seen maybe over the past 5 years or so in the crypto space. There have been like some kind of turn where um, crypto want kind of like to be like an extension of the traditional financial system more than
yeah,
build out its own thing. I think it's a huge mistake, but it's gonna have to get worse before it get better. I think like people,
yeah,
they don't quite realize that at this point in time. Like there is something actually. I was talking with someone Monday about that. Like we had a crypto discussion, and we were talking
yeah,
about the very early day of the cypherpunk movement, and when the
yeah,
white paper came out, and the- say anything before 2013, something like that.
yeah,
And one thing that people really don't realize now is why at the time, like everybody wanted to be anonymous, including Satoshi Nakamoto, and it was like very fishy by today's standard, right? And why people were like that? Well, you got to realize that before Bitcoin there have been numerous attempts at creating non-government currencies and stuff like that, and all of them, they got like pretty, like real quick and real intense reaction from various authorities, like either government or
yeah,
central banks or whatnot. Like people would get into a meeting at the central bank or at some government agency, like within a week of launching the project, and they would be telling them like, okay, you need to stop your stuff or you're going to jail. Basically that was what those meetings were boiling down to. And for some reason, this has not really happened with the current crypto ecosystem. And I think people have forgotten that.
yeah,
But because people have forgotten that, they have started building their ecosystem in a way that is much more susceptible to this kind of attacks. Right? Like Bitcoin itself is very resilient to this kind of attacks. But most of the DeFi systems that are being built nowadays, for instance, are not at all resilient to. And we see that for Tornado.cash, for instance, is a good recent
Yeah.
example where people build that system where basically you can send money to the system and it's going to send you back the same amount but to some other address. And because it's doing that with many people at the same time, it's very difficult to track whose money is who, and it's a way to provide some privacy on the chain. But the people behind it right now are in some legal trouble, even though they didn't do anything illegal per se. But like the accusation behind, like, so the guy behind Tornado Cash is like, is there is a court case going on, right? And we don't know
Yeah.
it's going to pan
Yeah.
out, but there is a court case going on. And
And
what is being accused of is kind of like the
of all
equivalent
places in
of,
Holland.
yeah, it's in Holland. And it's kind of the
I
equivalent
know.
of involuntary manslaughter, but for, financial stuff, right? It's like, okay, you didn't do anything wrong, but you built a system that have helped other people do something wrong, and you had a reasonable expectation that those people would do so, and therefore we consider you maybe responsible. It's gonna depend on what the judge decide and how the case goes, but like potentially you are co-responsible for that because you provide them a tool that they use that help them. And um I mean, I obviously don't agree with those kind of stuff, but you got to realize like this is this is how the legacy system work, and this is how they're gonna get at you when you build those kind of financial product. And we have forgotten that quite a bit. And as we welcome more and more of that word in, I think at some point it's gonna bite us in the ass, because
Yeah, and you look at
it's,
that system. Yeah, go
yeah,
ahead. Sorry.
especially right now, there is an economic crisis, and you don't know how they're gonna react, right? Like there is high inflation stuff, and maybe like if a lot of people start going in crypto because of that, the government are gonna be like, okay, we were tolerating that thing on the side because it was not so big and it was not so damageable to our own currency that we control. But maybe now, if many people are flocking to it because of inflation, we want to crack down on it. Like you never know. You never know if those people are
What
gonna
the
react.
ultimate motives?
Yeah.
Yeah. Yeah, but I mean, I think, just on that point, right? I mean, again, it just highlights that why do people in crypto land use that service, right? When I send money to somebody with a wallet, you can see my wallet information. You can see the funds I have in that wallet. You can see the transfers I do from that wallet. You have everything visible right away, right?
Mm-hmm.
And so in the event I want to send money to somebody, but I don't want them to know that it's from my wallet with all my details and all my accounts and all my funds in there. I would like it to go through a centralized, so through a service that hides my bank account, right?
Yes.
In the end, how many people, and there's a whole industry that's grown in the banking industry, the traditional world, where your bank account details are totally private. Nobody can see it. You need a court order to go and see Amaury's bank account with Credit Lyonnais, for example, right?
Mm-hmm.
They can't just go and look at it, and nobody else can see it. Whereas in crypto land, you can see my wallet. You can see my whole bank account if you want to, right? If you get my address and you know it's mine, you can then see that,
Yeah.
right? And you can see everything I have. And in some cases, people want to make transfers, and I provided a tool to make that possible. You go to jail for providing that tool, and is that correct, right? Is that a world we've come to
No,
where we
yeah.
don't want innovation anymore, right? We're stopping innovation.
I don't think this is, but I think the thing that government are worried about there is not that people have some privacy or not. It's that they don't have a special position in there, right? Because
Yeah,
I cannot see the detail of your bank account, but some government
right,
authority can issue, like there is a process. Obviously, they cannot do it willy nilly, but they can emit a
yeah,
court order and go with it to the bank, and the bank is gonna share with them the information about your account. I cannot do that, but the government can do that. Um,
yeah,
Whereas when it comes to crypto system, nobody has a privileged position in those systems, right? If you want to have privacy and you use privacy tools, I cannot see your financial information, but the government cannot see it either, right? And they're gonna have to revert to traditional ways of tracking crime and stuff like that. I think the, the authority have become a bit lazy as many of the payment became electronic, right? Because before they would have to do an investigation. Like, say you're selling drug, for instance, right? So
Yeah.
what would happen before is that they would do an investigation into you and try to prove that, okay, you buy drug from that guy and you sell it to those people, and yeah, and they build a case, and then they go to court against you because you're selling drug, right? But nowadays, what they would do is that they would suspect you to sell drug. They would sell a subpoena to your bank, get all the banking transfer, see who you buy it from, who you sell it to. You like the whole the whole
Tree.
investigation became much more simpler, right? And the like, if you have privacy through crypto, they're gonna have to revert through uh, traditional investigation method. But I don't think that's a bad thing per se. Like, I would understand
No.
if I were the one investigating. Obviously, I would be preaching for my own church and say, well, this is much worse and yada yada, right? But I think for society as a whole, it's probably better.
But also, I mean, if you are an investigator, there are really good tools out there to really do your work, right? And I think, like you've said, my view is, you can go to Chainalysis and find out all the wallets, who are the wallets. I mean, they pretty much know most of the wallets out there already, where the
It
coins are, what coins are where, right? I mean,
it really depends
yeah,
on
I
the
mean,
chain and on the system, and
sure, sure,
what people like, what step people take to ensure their privacy. But
yeah,
for
a large
for
part.
a large portion of the user, what they are doing is fairly transparent. And if you go to a company like Chainalysis, they're going to be able to tell you a lot of information. So in many
And
ways,
if I found a wallet address that I really, oh, this is really weird. This has got some really weird transaction. I don't like that. I need to go and find out.
mhm.
Can you do that? Then maybe you can go and do your homework and figure it out and find the tools, build the tools to make that possible versus hiring an army of 70 lawyers to go after a little developer who built a programming language that enabled
And
a service.
the degree to which people use those other tools to make things more opaque is also gonna be dependent on the degree of perceived legitimacy of the people doing the law enforcement, right? Because
Yeah.
if the chain analysis is used to catch real criminal people that most people think that what they're doing is bad and should be banned, then people are going to be okay with it and are going to be willing to have like a low degree of privacy, like enough so that if I send money to you, you don't know all my financial details, but someone like chain analysis could figure it out, right? Like, most people are going to be okay with that. But if you start, say, blocking payment to political opponents or movement that you don't like, say the trucker convoy in Canada, or
Yeah.
WikiLeaks or whatever, like, if you start doing this kind of stuff, people are gonna be like, oh, if they are doing that for the truckers today, they may be doing that for me tomorrow because I disagree with this or that, right? And when you have that happening, people are going to use much stronger privacy tool. And you saw that in the peer-to-peer ecosystem, right? Like file sharing and stuff like that. At the
Yeah.
beginning, people
Yeah.
use Napster, and Napster is very
Yeah.
transparent. And the government were able to crack down on it because they were like listening to the industry, like the entertainment industry, quite a bit, that wanted to crack down on that. But the result of cracking down on Napster was not that people stopped doing file sharing, right? It means that they started using Cademia and Emule and BitTorrent and all those other protocols,
Kazan,
yeah,
all these other
that are
protocols. Yeah.
way harder to block, right? And BitTorrent is still going strong today, and I can still get like any kind of show or music or whatever that I want on there. What effectively, like, it's not as used as it was, say, 10 years ago, and the main reason for that is not because the crackdown on those technology was successful. They are still there, they are still working, they work very well. The reason people are using them less today is that, no, I have Netflix, I have Amazon Prime, I have like a bunch of services that provide me uh, good content, good entertainment, for a reasonable price. And so people don't want to go through the hassle of using those stuff. So this is like, there is a big lesson for authority to learn from that. if they are leveraging those stuff in a reasonable way and whatnot, people are probably going to be fine keeping using technology that have a low degree of privacy. But if they start to crack down on that in a way that is perceived by the population as illegitimate, everybody's going to switch to Monero or Zcash or whatever, and everything
Yeah,
is going to
yeah.
turn completely opaque very quickly.
But I mean, just switching the topic a little bit, right? And you know, I mean, I think certain regulation is not bad, right? And I think some suggestions, for example, like Sam Bankman-Fried made around how to treat, you know, hackers, and how to sort of make hacking sort of a bad thing. I mean, which is basically, in a way, you could sort of look at it as, you know, outlaws in the Wild West that would go and rob a bank, right? And you know, maybe the bank wasn't 100% secure, but they robbed that bank and stole that bank, and that became a bad thing. And how do you do that? Because in some events, they're actually improving the code base because they've identified a flaw in the code, which allows me to then improve the code that I've worked on, e.g., improve the security system in my bank that I had in, you know, the Wild West in the old days. As such, how do I reward them, right? So there are certain elements that are not bad and can be adopted, right, to stop and make it harder for bad actors.
Yeah, but
Um,
I would expect for the most part those things are already legal.
yeah.
So I don't know how much extra regulation we need for them. Maybe, you know, like
Okay.
it's gonna depend on each country and the regulation that
Yeah,
already
which
exists. But
jurisdiction, right? Yeah,
yeah,
yeah.
and I'm definitively not a lawyer,
Good point.
so maybe I'm completely wrong there. But I would expect that
Yeah,
most of those things are already legal.
yeah, yeah. No, but I mean, I think it's just idea. I like the idea and the suggestion he made. But then on the flip side, right? I mean, I look at where, if you look at where Bitcoin came. I mean, you since 2009, or you know, or even 2013, and today all of the governments around the world are really, I think they're scared of where cryptocurrencies can go. They don't know where it's going. It's beginning to impact their decision making. And it's so much
Mm.
so that when Jerome Powell goes on stage and I need to make decisions based on cryptocurrencies as well, all of a sudden in 10 years, this currency has now made an impact at the top levels around the world. And now, so much so, these guys are now coming up with this CBDC, which is their digital currency equivalent of what their own cryptocurrency. I mean, is it really at all a cryptocurrency? And I know
I
you've
mean,
been warning about that, but do
yeah,
you
I've
think
been
people
worrying about
care?
that for years.
Yeah,
Well, it
yeah,
really depends how you define cryptocurrency, but from a technological
yeah,
standpoint, it's not so different from Bitcoin, right?
yeah.
The main difference is obviously
Interesting.
that it's run 100% by the central bank, and they're gonna see like
Is
transparently every single transaction that happens. So as you pointed out, like right now, if they want to have your financial information, they're gonna have to go through a court and that give a court
yeah,
order that they can, you know, bring to the bank and have the information that way. With the CDBC, it's like open by default, at least for the central bank.
yeah.
Uh, Plus, it's complete control as well. It's like if they don't want your payment to go through for whatever reason, they can block it as well. Which means that, like, think about it. Like, the consequences of that are pretty dire because, say, the government for some reason like wants to be hostile to you or whatever, right? And we have like plenty of example in history or even today of government that are very hostile to their population. So it's not like it's a crazy assumption to make. Like that's something that has happened many times in many parts of the world. Um, what they can do today is just like, okay, we stop processing payment for you, right? No payment processing
Yeah.
for you. And suddenly you cannot buy food, you cannot pay rent, and like you are a homeless person.
Out.
Like you're
Yeah.
completely out of society and destitute from one day to the next. And it doesn't matter how much money you had to begin with. You can be a millionaire, you can be a billionaire for that matter. If they exclude you from that system and it's widespread in terms of use, you're gonna be destitute and homeless from one day to the next. Um, so I don't think anyone should have this kind of power, quite frankly. That like
So let me play
I don't see anything
let me
good
play
coming out of
devil's
that.
Yeah, me neither. But playing devil's advocate, right? And sort of, I look at people and say, "Oh, the government would never do that, right? They don't have that interest in mind. They were only protecting us against bad actors, right? We trust them, and or yeah." So,
Well,
uh, uh,
quite clearly, I mean, like
yeah,
you look at every election. So first, like for most of the world, that's clearly not true, right? Like many
yeah,
government in the world are authoritarian. But you could say, okay, maybe in the West where we have more freedom or whatnot, this is better, right? But you can see people screaming at every election that your political opponent is literally Hitler and whatever, right? And maybe your guy is in power right now, and you trust him, and you are confident that he's not going to abuse the system, at least not in a way that you think is bad. But in a few years, your political opponent is going to be in there. And do you trust them? Well, probably not, right? And also, can you predict what the political climate is going to be in like 10 or 20 years, right? Like maybe there is a fair amount of freedom right now. Like you got to think most dictators in history have been elected,
yeah.
right? Like some of them did a
Interesting. Yeah,
political coup and whatnot, but by and large, historically speaking, most of them are elected, right? Like Mussolini was elected,
interesting.
Hitler was elected, Franco was elected. Like many of those
Yeah,
guys, they were elected. So who says that? Like right now, it doesn't look like it's the case in the West, but who said that in 20 or 25 years, there is some dude like that comes around and people fall into the trap and elect them? Well, you don't know, and there is not a good way to
interesting.
protect against
Interesting.
that,
Yeah,
right? So
yeah.
so maybe it would be okay if you were to roll out that technology tomorrow because you trust your government, but once it's there, right? Like it's not, once you open that door, it's open. You cannot go back.
Yeah, and to your point, right? At some point, some sort of regulation might change. At some point, if that does change, what does that mean? And given that power of central bank digital currencies coming into a new regulatory leadership, what does that mean? And how can they take control of it? And what will they do with it?
Yeah,
Right?
I mean, like it's like the ring of power, right? It's the power is just too great. It's gonna attract bad things. It's a matter of time.
Yeah, it's definitely interesting. Yeah.
So, like, you're a
Just
political guy and your position is not so great. You might not be reelected next time, or maybe you did something fishy and you're gonna end up in jail or whatnot. And you're like, well, I can just do it this one time and put my political opponent into trouble, and I get to put like a token for 5 more years where I can get by, right? Like, at some point, the temptation for someone is just gonna be too great to not do it.
yeah, and I mean, anyway, yeah. So I think that's another really good reason why we should really be cautious of this, and in fact, try to really limit this growth. I mean, I don't see it. I think the powers that be um, are really going to push this hard, right? I mean,
Yes.
you saw the new prime minister in the UK, G7. We all agreed to
I,
work
I think
together
this
to
is gonna
do this.
happen. I think this is gonna happen
It's
because the counterpower against that is really the crypto space. But when you look at
yeah,
most of the people talking about CDBC now, they are not like, oh, you need to use crypto, whatever. They're like, oh, CDBC is bad for freedom. We need to fight against it, yada yada. But you don't fight
yeah,
against it by bitching on Twitter. Like, I'm sorry, but you fight against it by creating a counterpower that is big enough. And
a
like
movement.
when I look at how fast those CDBC are moving, and I don't see the ideas of using something else percolating in the mainstream fast enough. So I think it's gonna happen. I think it's gonna happen, and we're gonna have to fight that as the underdog.
Yeah,
Like this is for me,
and
this is one
my
of the
view is
biggest deception. Like not deception, but disappointment
yeah,
of the crypto space. I think we had a good opportunity because it's it's 14 years old now, right? And we had a good opportunity, but at some point we were like, okay, we want to use that more as a investment vehicle than actually digital cash.
A utility,
And
yeah.
that leave the door open for, well, if you don't want to take that market, then the CDBC is gonna take it. And well, that's how it is, right? Like, you cannot change history, but I think it's probably too late now for crypto to be a major actor on that front, at least. I mean, in the short term. Initially, in long term, I'm more optimistic.
Bullish.
Yeah, because I think, when it starts hurting, people are gonna realize that, maybe it's good to use something else. But I think it's gonna have to start hurting for people to get back to those
A
ideas.
lot of people, exactly. I think Pink Floyd have a good name. It's comfortably numb, right?
Yeah.
So I'm comfortably numb, right? So it's like until you actually feel the pain, you're going to stay comfortably numb, right? I'm comfortable. I'm okay. I just be blind to it, and you
Hmm.
can hit me a couple of times. I won't feel it, but
Yeah, I think we're gonna have to
when it
feel the
hits,
pain. What is scary to me though is that
I,
by the time there is enough pain, is it possible to get out? It's gonna be like, because it's your money, right? Like, you're literally paid to stay in. Can you afford to get out
yeah.
by that point?
Yeah, that's the thing. You're just so sucked into the system. But I mean, I do feel that, sort of you and I mean, you've gone through a number of cycles, right? Crypto cycles, ups
Mm-hmm.
and downs, and four or five of them. I don't know how many, but we've gone through a number. And every time in a bear market, I found that it's really brought together sort of, I call them the TBs, the true believers, right? That have really sort of stuck into it and really tried to put through it. And it's been more about the utility of DeFi, decentralization, peer to peer electronic cash systems. That has really come out, and really that's what strikes home versus just purely an investment asset, right? It's a
Mm.
new asset class. We have to invest. It's like a stock,
No,
it's
yeah,
like a foreign currency
I
trading.
always found
It's
the
like,
bear market to be the more interesting part of those cycles. Yeah, like, definitively,
yeah,
I'm with you there. The bull market are usually a lot about hype, and last time it was like NFT and whatnot. The previous time it was
yeah.
ICO, and like, each time you have something that is being hyped, but it's never really the thing. And when the price goes down, then all the people that are hyping whatever, they all go away, and whatever remains are the people that are steadily building for years. But those are actually the people that move the space forward.
Yeah. Yeah, no, I think it's like that's it, right? I mean, it's how do we move the space forward? How do we collaborate? How do we build this new system and allow people to opt into it, right? And there are ways of turning the actions into sort of new terminal, right? Web3. It's a much softer word. The network nation, right? So we've got this whole new ecosystem blowing up around, oh, I can build a nation of people basically in the common interest, not necessarily where they are in a sort of piece of
Mm-hmm.
paper with a red line around it, right? But actually, oh, look, we're all collaborating around a common project. Next time you come to my island, you can stay at my house, and you can, and vice versa and stuff like that. So
Yeah, I
there
think
are collaborations that are happening.
this is how we move forward with it. Like, we're gonna have to create
Yeah.
those communities of people that know each other and trust each other, and that know how to use tool outside of the traditional financial system. Those are gonna be the group of people that allows us to get out of the CDBC nightmare or panopticon.
Yeah.
And yeah, you cannot do that alone. Like,
Yeah.
you need to have a social group of people that are into crypto, but that are into using it. Like, because if all you do is flipping coins on an exchange, um, I have nothing against that, by the way. But if this is like all you do and all you know to do, you don't have the basic tools that you will need to circumvent CDBCs.
Yeah, so everybody get involved in DeFi, learn about the power
No, no,
of
to
these new
use it really,
systems,
like, use it
and use
not
it.
through
Yeah, use the tools.
not through an exchange or through a party that does it for you, but learn to actually use it. It's it's very important, and it's where the battle for your freedom is.
And it's super exciting to see in a lot of the universities, the number one classes that people are attending and looking to study is around blockchain, right? So a lot of programming, software skill sets, programming language, education ecosystem is really growing to support more education in how to use these tools and build utility value off the back of these,
Yeah,
because these are new systems for a modern world, right?
I actually did the few intervention in various engineering school in France on the matter, and there's definitively interest, like 100%.
So thank you, Amaury. This is really good. Super exciting times. You know, it's like struggling times. We're going to
Hmm.
have some hard times in front of us.
Well, it's the bear
But if it were
market.
easy,
It's the bear market.
exactly.
But
But
here is the thing, though. People think it's bad. They have not gone through the previous one. Like, I remember
yeah.
the bear market around 2014, 15, something like that. I'm bad with date, but
Yeah.
in that era there was a bear market that, and people were committed suicide and stuff. The price went down by more than 90%. No, we're like, oh, 70%, it's really bad. Well, we got to like 90, 95% sometime in previous bear market. So those are still pretty rough, but they're getting softer every time. So,
Yeah. And yep, exactly. Let's we learn with it, and
look at,
what it
yeah.
does do though, it brings together a lot of the people that were suffered through those downtimes that really work together to really try and build better
Yeah, it also like
services, better
separate
utility.
what was
Yeah.
hype and what is actually
What
something
was re-
solid enough that it can power through this kind of difficult time.
yeah. And we're still early in this industry, right? This is super early. I
Mm.
mean, we've got so much opportunity in front of us. And that's why I'm super excited to be having spoken to you again, and super excited in this industry. I think we can still make a change, and we can drive this change, and
Oh, it's just the
we
beginning,
have
and
to drive this change. Yeah.
it's like the way I see it. It's gonna be a multi-generational endeavor, right? Because you're not gonna change money and the whole financial system in 5 years, right? It just doesn't happen. There is a force of habit there that is too strong. There are cultural elements, so it's gonna take like at least a generation for that to become the main economic system. It's probably gonna take a couple. So we're definitively early.
Yeah, no, I think there's just so much to do. I think we still need to provide alternatives, and maybe we need to go back to getting the community more engaged in this, right? I mean, they banned ICOs for a simple period of time because they thought everything was a scam. But in a way, I mean, a lot of these were ICOs, right? I mean, a lot of the real, avalanche came out of
Hmm.
a community sale, right? I mean, a lot of these great protocols, and
Well,
Bitcoin was a,
ICO,
yeah,
just like DeFi, was like 90% scams, but like Ethereum also like was an initial coin offering.
yeah.
AVAX as well, as you point out, like several big reputable projects that run today were also ICOs. So many scams, but not just scam. Like, and the few of them that were not scam ended up doing very well and have a very big impact. So that's why
And
that's why
so
you don't
if
want to
you are,
blanket ban
yeah,
those stuff, right? You
exactly,
want
you
to
can't
leave
just
the
blanket ban.
opportunity to people to uh, learn how to distinguish the scam from the good stuff better, and that cannot happen if you ban it.
In venture capital, they call it a 10 bagger, right? So they need one investment to return back the 10, the nine bad investments they did, because that 10th investment paid off for all the 10.
Hmm.
One investment out of 10 paid off for all those 10 investments. So nine go bad, one does really well. And I think crypto is no different, right? I mean, in fact, I think that the odds are actually better if you do your research, you find out who the team is, talk to builders who are working in this space to help you find out the quality of a specific project, and maybe talk to 2 or 3. You can't just go in one person anymore and get your opinion from there. Oh, go into that one. Why? Oh, I don't know. They went in, and then don't go in, right?
Yeah,
Like,
you
oh, it's paying you 19% APY. Oh, yeah, I'll go in.
yeah, you
so
want
it's just, it's,
to look at the people behind it, especially like if they've done rug pull in the past or if they have no past whatsoever. You want to be
yeah,
a bit careful. Obviously, having good people behind the project is never a guarantee of success, but it's already a guarantee that it's not a scam, right?
yeah,
Which is already something. And if you follow that, you are not going to invest in scam. You invest into several of them. Some of them are going to pan out and pay for the one that don't. So you're good.
yeah,
Like
exactly.
that's part of investing as well. It's some like you want to be somewhat diversified, and you want to be like you want to be cognizant of the fact that sometimes good idea that just don't work for whatever reason. It's not the right time. It's it was the right thing didn't happen. Like there is always a degree of luck in success, right? I don't believe.
Right time, right place.
Yeah, sometimes you just need to be at the right time at the right place, and someone at a similar ID, but they were not at the right time at the right place, and it didn't work for them, right? So there is obviously like hard work and having a good vision. All of that is important, but there is also a degree of luck, and so you need to be cognizant of that. And it's not just because you have people that you consider to be serious and whatnot working on it, like it may not pan out. But on the balance of probabilities, you invest into several of them, you make sure that those are serious people, you're probably gonna do good.
No, super glad. Thank you, Omri, for your time
Yeah.
and your insights. Super experienced, hardcore developer. Where can people go to follow you, and what should they, what do you want them to look up and find out more about eCash and about your ideas and inspirations?
Yeah, so if they want to learn more about eCash, e.cash is going to be the website, and there are going to be links with various social media on there or Telegram groups and stuff like that. So like it's eCash official on Twitter. There is a Telegram group with a bunch of people in it. There is one for developer, one for more of the like wider community, and there are like several of them also in several languages. Because turns out many people speak
It's a
different
global.
languages. Yeah, so the main one is bit international in English, but then we have like local communities. If they want to hear about me, it's gonna be Diddlenix pretty much anywhere on Twitter or GitHub or whatever. And yeah, that's pretty much it.
Yeah. Thank you, Omri. Super glad, super exciting.
But more than listening to me,
Yeah, and
people
look
like
for,
just learn to use it. That's really what's gonna be.
yeah.
That's really what's gonna be useful to you in the next several years.
So learn to use it, guys.
Mm.
Check out eCash, learn to use it, and learn to use all the different services and find out what works, what doesn't. Be cautious. Don't go all in one go.
Yeah, buy
Take it
small
step by step.
amounts
And
so that you can play with them and get a sense of how that works. If you see that it works well and does what you expect, then you can go with bigger amounts.
yeah. So thank you again, and talk to you
Thank
soon.
you for having me,
Thanks.
Stefan.